Hello everybody, welcome back to the channel Property Wealth Decoded. As mentioned in the video earlier, interest rates are rising and a potential recession in the US is on the horizon. Some say it's better to buy private property sooner rather than later in this environment. But should you listen to them? I'm Harvey, a seasoned realtor, analyst and consultant who has spent the last 16 years studying and brokering in the local market. Last December, I predicted that the new launch sales volume would drop and that resale volume will maintain. Today, we will look at the facts and figures and see if that was accurate and how buyers and sellers should act. In one of my predictions, I had mentioned that the new launch sales volume is to fall in 2022. Now, in reality, based on the current number of units sold, this year should end around 8,000 units as compared to 14,000 plus last year. For the first 6 months of last year, about 7,300 units were sold. And in the first 6 months of this year, only about 4,500 units were sold. I did mention previously that the new launch figures would be lower, not because of a lower demand, but by virtue of lesser new launches that is going to be launched this year. The reality of the numbers are a function of a lack of new inventory for sale, both in projects that have already been launched as well as new ones. There is also another reason where I feel that some people are holding back their purchases in anticipation for other launches that they may be looking forward to. Another thing that is weighing on everybody's mind is towards the interest rate environment. Now, the interest rates are quite clear and transparent that it's going up. In this kind of environment where interest rates are going up, I think what is weighing on people's mind is the sentiments and what they don't know and how they should react should there truly be an interest rate hike that will really hit them in terms of their mortgage commitments. Another reason could also be because of price sensitivity. Now, we all know that the current environment whereby land prices are more expensive than it has been, and that's always the case. But we are also in a unique scenario whereby the supply chain issues have really forced commodity prices as well as construction costs, plus the short squeeze of labor supply, meaning that the overall margin to build a project is greatly reduced for the developers, but at the same time, their hands are tied. There's no choice, right? They have to sell it at a higher price. Now, for consumers who are buying, I think there are a few things that they will look towards, and when they see prices at a level that at the current moment they can't accept, they're probably not going to buy it. So it's kind of like a price acceptance, which is happening in the HDB market, whereby it took time for price actualization and acceptance of the market from consumers to take the current price points. So just as an advice, if you're a buyer, I think what you could do is to be prudent about your budget. Now, investments should allow you to have a better peace of mind, especially when we are talking about real estate. In Singapore, people buy real estate for a peace of mind. You can always work on a smaller budget, which would probably buffer you should you have concerns about rising interest rates and your exposure to mortgage commitments. And for a new launch product, if you currently have no property and you want to buy into this segment, it could bode well for you, as the payments are small incrementals based on milestones in construction, and the impact of interest rates may not be as high. However, if you need to rent while buying, do note that the rental market currently it's very vibrant, it's on the high side. And you could probably mitigate that if you truly still want to buy a new launch, but feel that if you need to rent to buy, then you have to taper and tweak your demands and your needs towards space and the location that you want to stay in, which will help to marry up both your wants and your needs. Another prediction that I made last year in December was that I feel that the resale volume of private homes, both condo and landed, should continue. And I think that the reality is that it's optimistic, albeit as slow and steady. From January to June of last year, we saw about 10,800 units being transacted. In the same period this year, we see about 8,200 units being transacted. Now, what does that really mean to you? if you are a seller in this current market and you do feel that demand could be slowly tapering off, less viewings and things like that, I think what you could do is, together with your agent, really have awareness of what's being listed in your condo or what's being listed in your landed estate. If you're forward pricing in anticipation of a very optimistic view towards the market, you will realize that if you're going to be pricing higher than your neighbors, that eventually they might not end up buying your unit, because naturally buyers look towards buying units that are more fairly priced. Now, if you're in the landed segment, you definitely have a higher chance of being able to price at a premium, because we do know that landed supply is very limited. And if we were to buy it down from a GCB all the way down to a leasehold 99, you will realize that the buyers in this market behave very differently. In the GCB market, I think cash and interest rates may not be as big of an issue or a concern, because when they are buying such products, it is at the top end of the market. Now put yourself in the shoes of a buyer for a 99-year leasehold property. They will probably be more exposed to interest rate environment because they are likely to lever or leverage for their purchase, as in borrowing a loan. And the amount of cash that they keep behind will probably be for their mortgage payments or for renovation. And therefore, what it also means that if you are a buyer, that you could also exercise being prudent about your budget and what truly fits you. Or secondly is, if you're looking for something that doesn't really need renovation, you will realize that you have to pay a premium. And when I say a premium, it means that there will be a chance that there will be a fierce competition and being outbidded should you continue to wear the cap that everything in the market needs to be priced and marked fairly. Unfortunately, in the landed segment, supply is limited. Supply, it's almost finite, if I may say. So therefore, when you are buying a landed property in the market today, do be prepared that if the unit is newly built or if the unit is relatively newly renovated, that you might have to pay over and above the valuation. So that is one other advice that I have for you. Now for the buyer, if you are in the resale segment and you're still looking for something that you think that will suit your budget, do also be able to tweak your demands towards which location you might be. If you were to place more on a per square foot basis, you will realize that you're probably going to end up further outside of core. However, if you want to have the cake and you want to eat it, if you want something that is freehold and you want something that is prime, do be prepared to pay more for renovation to keep this purchase within your borrowing limits. But my advice to you, it's still the same. In the year of 2022, I think everybody should exercise some form of prudence towards their budget. And a few hacks that I think that you could consider is this. If you were to do an IPA today, and let's say you're able to borrow a loan of $1 million, perhaps you could consider dropping that loan amount to say $900,000 and work backwards and see what kind of budget you can really work on. For most renovation work done in today's market, I would say the cost has escalated close to 20 to 30%. And in that regard, your renovation budget should also be budgeted higher in the case whereby you might take a longer time to finish doing it, you might need to rent a bit longer, you might need a bit of time to source for some finishes that is currently not in Singapore yet while you await for that. And of course, if you were to take the current stock that is in market today, then you would have to take the price as well. I'm sure there are pretty good deals going around the market. You just probably need to practice a little bit more patience to what's going around and scouting the best deals. There will still be deals in the market, both for buying a house and also renovating your home. Well, if you find the above video something that triggers your thoughts, and you still have some questions or uncertainties towards how you should view 2022, I believe that with my experience, both as a realtor and in the finance space, that I could probably marry both of your needs and your wants, and as well as address your concerns. So drop your comments below and see you in the next video. Thank you.